The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour this May the 27th, and it's my pleasure to be here Monday through Friday, 11 o'clock till noon Eastern Time. At that number you just heard, 877-927-6648. I just happened to glance to the front page of TFNN. If you didn't use this weekend to take advantage of that six-pack, those 6 videos, two videos, between 2 and 1.5 hours each by Tom. Same thing with me. Mine's on moving averages and the MACD and slow stochastic, and 2 fabulous ones by Mike Comey. This go to the front page. You got a chance to do it before it's taken off. It was a special through the weekend. Take advantage of this moment. Everyone's too busy to take it down. See if you can sign up and get it. It is for the price of $149. You get 6. I'm saying it quietly just so that you can get it under the radar. And I think it's a great opportunity for 11 hours worth of learning. That's not 11 hours because it's 90 days on your page that you can just review it. So, hey, great opportunity. So here we go. The Dow is struggling to make an all-time high. This is very interesting. Why? The E-minis did that over the weekend. Right here, leg D up into the inside track resistance zone, right there. Leg D, stochastics at 9%. That's very good. MACD is still good. 120-minute chart. I've got it as an F. It could change. I could have an alternate count, but I'm calling it F for now because it has pulled back. No, I'm sorry, it hasn't pulled back. The MACD has pulled back quite sharply, and the stochastics at 82%, but coming off the mid-90s percent level. So this says we've got to be a little careful in the near term. But hey, have a look at this. I believe that I have to call this leg C in the weekly, but it's the Dow. Let me show you what I'm talking about. The Dow, fabulous. Is it today that they want to get the new leg? Then everybody has it. You've got, if the Dow, which is at 16,685, up 79, is able to get another 50 points to the 16,736 level, today it'll join the New York Stock Exchange. Look at this, NYA.X. Today it did it. It went to a new high. Now I've got this as a leg, a potential leg E. Let me just double check here. 518.95, 519. Oh, okay. So it's either E/B. It's either E or B. Big difference. Whoops, I mustn't put that in. Let me just change. I'm just doing things a little too quickly here. Let me get it back. I need to put a plus sign there. Put an up arrow. I need a plus sign. Stochastic and MACD are not by mode signals yesterday, although the price is at all-time highs. But it's leg D in the weekly chart, and that's what we've been waiting for. So now you've got, let's just do weekly chart for a moment. You've got leg D in the weekly chart of the NYA. The S&P, SPX, which right now is trading up 10.70. So the Dow's lagging a little bit, the 0.57%. Really, actually, it's not bad. 0.57 in the 500 stocks of the S&P, 30 stocks of the Dow up 4.7. Okay, that's fine. Now look what we've got. We've got a potential E in the weekly chart, but there's no signal yet because price also is a determinant of trend. And right now, with the price moving higher, it's a little messy. I'm just going to try to clean this up so you can see what I'm looking at. That's the outside of the inside track. All right. So what this says is the S&P at 1911 is close to the resistance line of 1930. I say close, although that's 200 points on the Dow, 20 points in the S&P. I'm just talking about in the overview, you'll see that it's getting close to that line. And the MACD is trying to close back over this week the slow-moving average, the red line, slow, and the green line's fast. And you've got the stochastic at 8%. And you've got the monthly chart in leg D right up against a very long-term resistance. So let's put the picture together. You've got the IWM, which was a leader, became a trend leader to the downside in that movement on March all the way down to the week of the May the 15th low. And what it's done now is a nice bounce. It's what I call a gray A because it's way underneath the previous high. So we just painted gray there, gray. And the stochastic way down 26%. So this is something to watch very closely. And the Qs have been the leaders on percentage terms to the upside. One of the reasons why for my subscribers, my opening call, I wanted to have the Qs because I wanted to see if there was a chance that there could be a strong enough rebound to get to the 91.36 recovery high. If it goes to 91.37, and so far the high today is 90.68, if it goes above 91.36, that weekly chart, it might have recycled to a new level B. I don't know. All I can say is it's going to be E/. The moment it goes above, I pick up the old D and I call this an E and a brand new B. And then we have to look at all the other things. And what happens is it goes into a leg F unless it's recycled in the monthly chart. The whole concept of recycling is one that took me a long time and a lot of money to figure out. One of the reasons being I used to be very determined that I'll stick to the notation, and if it does change, so big deal, then it changes, I'll change. I learned over the years it's way better to be aware of the possibility so that there's no surprise. And all the time I say is the price is acting very well. I don't have to make a decision right now in alternative wave counts are usually very positive at that particular moment because it says I don't have to make a decision right now because the price is going to tell me. The price starts to fade here. Instead of going to way above 91.36 into the 92s, there's a turnaround in the next few days, and 88.24, the weekly 9-period moving average of the QQQ Trust Series, is taken out. This is, after all, leg. That's the way I'm counting it for now in the daily chart. So that's going to be very important. Here's another thing. You've got laggards. You've got the IYC, which is the very nice leg D in the daily, but the weekly is just a retracement mode, and the monthly says that former peak E, we haven't gotten close to it yet at 124.99. It's at 121.47 right now. The IYC, which is the iShares Dow Jones U.S. Consumer Cyclical Sector Trust. With a name like that, you can understand why it's lagging a little bit here. So let's go on to, look at this. This is the XMI. Oh, I wonder if I've still got the notations. Yep, I do. So leg D, peak D, actually in the weekly chart. This is the one with the mix of cyclicals and the safety stocks, like I think we'll have one of the Philip Morris's in there. So this is going to be very interesting because this week is going to be the week that gives us the tell, that gives us all that information. We're hoping that it gives us all that information. After all, if Ford is running up 14 cents at 16.60, up 87 cents, and General up 17 cents, and if General Motors up 2 cents is trying to rally, we're going to watch these as well. What about an Alcoa? I mentioned to my subscribers this morning, we don't have a position right now. I'm watching these guys real closely. What about the IBB, the biotech, the NASDAQ? But it's only in C in a retracement, leg B in the week chart. It can still go more. It can still go. We are still short, actually, all the way from the very top. Then a few points at the top. We could have got out at 207 around that area, but instead we were buying the long side of this, 200% long. We haven't done anything right now for a little, but I'm watching it very closely. To me, everything about the market chart says you've got to expect a retracement rally, and then it's going to fail. The IBB, iShares, NASDAQ Biotechnology ETF. What about something else? Oh, before finally I decided to look down at my page instead of looking through my page that I write all my notes on that I should discuss during the show, and I never remember. And for a week, I've been wanting to mention a very good show here by Stephen Sondheim, musical, called Into the Woods. It's on right now, and if you're interested in musicals, they're a little bit darker than some of the ones that you often see. But this is the guy who wrote Sweeney Todd. It's really very, very good. I mean, let's put it this way: you really get your money's worth. So I think it's worth going to see in the Boston area. Okay, so back to our story. What about bonds? Look at this. Bonds are holding at 112.83. Potential, this is a PT already in the weekly chart, a retracement that stopped right at the resistance point in the monthly. This is going to be very interesting. Why? Let's imagine for a minute there are two scenarios. One is that bonds which have made peak E have in fact topped out on the short term. Are we looking at this and saying, hey, looks like money's going to go back into the stock market? Wait a minute, back into the stock market? Money's been coming in, but money's also been coming out. This is one of those, this stealth bull market for the last 5 years has been probably the most mistrusted of any bull market that I can ever remember. Oh, I remember the one in 82. I remember I got a major bicycle in July of 82, and I had to wait until August before it broke out. But wow, and that one there was a tremendous amount of disbelief for a long time. But this all-time highs under all those circumstances, it's an amazing market. So bonds are going to say, if bonds at 137 are able to break above 138 and a quarter to 138 and a half, that's going to be very positive. That'll say money is remaining in the so-called safety of bonds. But if bonds start to break down and suddenly they go, instead of 137, we're looking at them in about a week, and they're trading under 136. And remember that my weekly, I don't know if I can pull it up right now. Is that TNX? I know TNX is the 10-year, isn't it? TNX, let me just check. This is the 10-year Treasury note. I didn't want that. TVX. It's not TVX, is it? TVX. I'm just trying to get the 30 here. All right, I forgot what it is right now. I'll pick it up in a minute. As soon as we have the break, I'll check it out. That has gone to a leg D, which is possibly going to be a trough D, the weekly chart. So this is worth watching. And that volatility index D. I'm just a little cautious right here in wanting to put too much money back to work. We have really a very nice position in the Qs, alongside of the Qs. It's doing very well. It's in leg D. I'm just this. Do I rotate into the cyclicals? Is that the time to do it, or is this just the time to be in a heavier cash position, watching this play out? I'll discuss that when we come back. Basil Chapman, Dow's up 722, S&P's up 980. Be right back. 877-927-6648. Talk a little bit more about the VIX and about what to do with this particular point. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Actually, while we're on break, in the den, Beaky was looking at the AZO. Says, AZO down. Is the Messiah coming? Well, this will be one of those great stocks. This is like the equivalent of Joseph A. Banks, but in the not in the clothing area, but in the auto car truck part area, and made a peak D, but had a high level consolidation in the monthly chart. Weekly chart has every indication that there's a chance that it could be making an H pattern right there. And what we're looking at is the daily spiked 1 penny above the previous high of 546.70. All-time high was 561.62. 561.62. And it goes to 546.71. Opens at a round number 541. Hits 546.71. That has all the implications of what I call a rogue wave. And rogue wave says that the bar that looks like everything should be short and then spikes to a new high, goes fractionally above the previous high, gets everyone who was short to start covering, and gets everyone who got out of it thinking it was going down because of the last dip back in, say, oh, man, we should never have sold, and just long enough to then turn around and buy that bar's close to be way lower than it was when all this started. And right now it's at 533, hit 529.15. Somebody watching this one real closely. Why? Because it really is a tell on many things. Because what if the auto parts area is starting to lag because Ford is starting to see some buying? and it's in a symmetric triangle in the weekly chart. Got to watch this real closely, because this is one of the few times over the weekend when I was looking at stocks and different indexes and going through dozens of the Investors Business Daily stocks, where I was saying to myself, the market up until now has been relatively calm. In fact, it's been the most calm it's been. When people talk about volatility, they usually mean downside volatility. They don't mean upside volatility. In fact, there's been upside volatility and very little downside volatility. That's number one. Number two is, in the spectrum of market challenges, that decline, if you had said to me, okay, we've got the IBB pulling back over 20%, you've got the momentum stocks, some pulling back over 40%, where do you think the market would be? I'd say way, way off the lows. But the rotational aspect said, no, don't get carried away. This is just a very well-tuned, a finely tuned Maserati or something, Ferrari, because there is constantly energy being sourced that you can use even on the biggest hill. And basically what we're looking at this particular point is, and this is what I was going to discuss earlier, I want a couple of hours to go by, well, the 2 hours that have gone by into the market today. My thinking here, I just wish the Dow had made an all-time high. Missed it by 50 points. Days Young could still do it today. I think it'll do it by tomorrow or the next day. I suspect it's going to do it. It's the only one that hasn't. And at that particular point, I'll be watching AZO, AutoZone. I'll be watching the volatility index, the VIX index. I'll be watching bonds. Gold is down. Oh, I didn't finish the numbers. Gold is down 23 at 12.68. The silver is down 35 at 19.06. Platinum is down 19 at 14.61. High-grade copper is back in the 3.1 area. Crude oil is at 104.14, down 21 cents. That's nothing. It's still up there. And bonds are up 8/30 seconds at 137.08. Dollar is, in fact, up just only a penny. This is amazing. You know, you've got, look at this. So here you've got GCM. I'm still using the June contract. I don't know what people are trading. Looks, you know, I've been talking about this for some time. I thought that there could be a B, maybe even a C in the weekly. But then we go back and we test the most important low of 1277.40 made on the 1st of April, and I've adamantly been trying to avoid going to the long side on golds. I really thought seriously about buying the DZZ, which is 200% short gold, and then I thought, you know, we're into other things. I don't want to be distracted, but it would have been a beautiful, beautiful buy, DZZ, up 25 cents, up 3.83% at 6.78, and this is only leg C, and leg C in the weekly chart. It doesn't harbor well for gold. So I'll be back. We'll be looking at the euro and stuff like that. I'd love to take your calls, 877-927-6648, and then let's see if I do remember this time. I'll try to continue talking about the VIX index. Dow's only up 59. S&P's given back quite some. It's up only 8.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Andy Hecht has just announced a live 90-minute webinar that he'll be hosting Saturday, June 7th from 9:30 till 11 a.m. Eastern Time, entitled Energy Opportunities During the Summer of 2014. With the frigid winter having depleted some key energy stockpiles, Russian political tensions high, and the storm season for the Gulf setting up to reverberate through energy markets worldwide, opportunities could present themselves over the summer months that could provide huge payoffs. When you sign up, you'll gain immediate access to a 7-page report Andy has put together as an introduction to what he'll be covering, so you can start preparing and get a feel for what Andy will be discussing live during the workshop on Saturday, June 7th. Andy will be advising his attendees of at least one trading recommendation in each area, including crude oil, natural gas, coal, and refining spreads and oil products. The best part is that this live 90-minute webinar is only $99. Don't wait. Sign up today and reserve your spot while gaining instant access to Andy's 7-page report right now. For all the details, visit the front page of TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, we're back. I just want to show something here. Basically in the Chapman wave, what you look for is the most identifiable low bar in the 2-minute chart of the E-mini. Look, we went down to 1903.50 at 20 to 10 this morning. Then you started an A, B, C, 1, C, 2. Then it goes to D. D is what you want, the fourth highest peak. And now you've had a pretty good, one of the first decent pullbacks in the 2-minute chart. In fact, almost all morning, and you've gone from the high of 1909.25 to the most recent low of 1906.50. I would not be surprised if 1905.75 is tested the 200-period moving average right there. This is a 2-minute chart. Remember, you can't. This is for quick trades. And the 5-minute chart made a peak F top. And broke down underneath the 9-period moving average. Watching this closely, so far it's holding really well. But if there is a break of 1906, there's a chance that the 1904.25, 1904.50 area with the 200-period moving average will become support if there is a pullback later in the day. So now let's go back to the volatility index. This last week was the week where technically we should have seen in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. In week 14 to 15, that's where this is usually the strongest move up in the volatility index. What is the volatility index? It is it's a gauge that is measuring, I term it, buying intensity and selling intensity. As long as I keep it as simple as that, I don't get involved in all the other stuff, I find that I've been able to work best with the volatility index. Now, the volatility index last week went to 1136. So at 1136, that isn't as low as the 1105 level that was made back in March, but it's getting close. And that is the area. You see, there's a trend line that I've drawn. Let me just move this across. That trend line from the 1105 area was a rising trend line. Now it's gone back to being flat. And in fact, what it's done is gone back to being right there. It's gone back to being a base of support that says from this area, there is a much greater chance. Yep, North, thank you very much. Tuesday. North will be on. I'm sure it will be North for the options exploration, options for the options show. Think or Swim coming up straight after me. And, of course, I always recommend highly that you listen to North. Just a fabulous show. He's got such a wealth of information, and it's pretty much a digest of anything that you can do with options. So it's a great show. Yeah, VIX is a measurement of implied volatility. Yeah, North, I tend over the years to try to do the technicals as accurately as possible, but for the ease of understanding, I've developed ways of looking at the TRIN index, the TRIN, what I call the TRIN gauge, that was developed by Richard Arms, which is it's a fabulous index, except I don't ever know how he uses it, because I think he uses very, very different to the way I do. But I love to use it as particularly it's a tool that's already been made. It's my interpretation of his tool. And the same thing for the volatility index. And I treat it simply as buying pressure and selling pressure. And if it's buying pressure, we should be saying, hey, wait a minute, you're way down in the 1136. Isn't that buying pressure? And the answer is absolutely. That's why these indexes are all making, not all, but the majority of them, key indexes are making new highs. So I try to keep it as simple as possible. Think of it as buying pressure in the low teens to the single digits. That's what we found. Now the whole number game has changed. If the volatility index is able to pop at any point into the 1270 to 1350 area, that'll say, whoops, be careful. Now we're starting to get selling intensity, even though before that selling intensity only came in up in the high 16 to the low 17s. So in order to sustain a down move, and I suspect we're going to be getting one, but not just yet, we want to see the volatility index continuously in the daily chart, especially the weekly, but we deal with the weekly one thing at a time. You first got to get the daily, the shorter term, to make higher highs, higher lows, and then to sustain that rally and to sustain it into the close. If you have those pop-ups that keep coming back, that's just saying, hey, I can't even hold. There's just too many buyers. I can't keep the selling up. I'm sorry, folks. I can only do one thing at a time. And selling is predominating. Just keep it as simple as that. So in the 11s, low 11s especially, that's giving you the buying pressure. But absolutely on a technical basis, it's measuring implied volatility. There's a mathematical formula for it. Don't we need to at least hit 1105 again, Basil, to double bottom? There's no rule that you have to do anything. We could go see the Dow spike to a new high tomorrow, even today, but maybe tomorrow, and the others start to lag. And if they lag, the VIX will move up without the Dow. So it depends on the makeup of how the different indexes are working. So let's go to John in Philly. Hey, John, how are you?
Basil, I'm pleased to speak with you. My morning, I wanted to speak to you about IWM, but my morning has been a challenge. I woke up this morning and found one of my key trading computers was hacked overnight.
Hacked? Oh, no.
Hacked. And all the data on it was corrupted, encrypted, so I'm working on backups and going through that whole process. Quite a challenge.
What a damn nuisance. Oh, I'm sorry. Oh, jeez, I hate when things like that happen. Well, now, are you sure that it was hacked or there was a bug? There's a big difference.
That is unanswered at this point in time. I've got a big job of troubleshooting ahead of me, so I can't answer that. It could be one of the
Okay,
other.
because I've had quite a bit of problems with my stuff. I'm tracking it down, and it might be one of the programs might have had some kind of corruption. So it's just, in other words, it's a bad data, something or other. That's very different. So I'm trying to resolve it that way. Yes, John, you'd like to look at
the IWM. Basil, I wanted to follow up. We had a conversation 1 week ago today on the Russell 2000 and the IWM.
Yes.
At that time when we spoke, IWM was right around 109. I will tell you I am long some IWM. I'm long not as much as I'd like to be in retrospect, but I can't help but think that the low that occurred back on, I believe it was the 14th of May, in which the
on the 14th of May, correct? On the 15th of May, correct? Yeah.
Yes, in which the Russell 2000 marginally undercut the February 5th low. I can't help but speculate that was an intermediate term bottom, and we spoke about that last week.
Right.
Mucked around on Monday, Tuesday, and Wednesday, and then, of course, got strong Thursday, Friday, and now is quite strong. And on a relative basis, IWM is rallying more than either the S&P or the NASDAQ composites. Anyway, we're at 113.40. I speculate we're going back to 120 on the IWM. I wanted to ask you if you see something similar, but actually more importantly, wanted to ask if one is long here, what tactics would you, Basil, use in managing a long position? In other words, what areas, what would you be looking at, following closely, to tell you I'm going to get out of my longs and protect against this market, in fact, not being in rally mode back to the highs?
Okay, so that's a really good question, because it's the question that, in fact, I was just about to deal with. I was going to wrap it all together with the VIX, with bonds, with the dollar, with just a chunk of things. I've already done part of it. So let me introduce the concept here that the IWM, which is the iShares Russell 2000 ETF, has made a doji candle peak E in the monthly chart. And as you know, DEF, that's where you got to be really careful in monthly charts. And I'm looking at the MACD starting to turn down, but it has not crossed negatively, but the RSI has. The stochastic has made a decided U-turn. The on-balance volume made a double top with a weaker peak when it went to the 120.58 all-time high, so far all-time high of March. It's holding above the 9-period exponential moving average, which is a good thing. The weekly chart has had one of its most severe pullbacks in quite a while, going from 120 to 107.44. And so that's a 13-point decline. So that's about 11%, 11.5%, maybe 12%. And in this, I'm treating it right now as a potential rebound from a double bottom. In the weekly chart, the previous low was 107.27. It hasn't broken that. And I'm suspecting that the IWM is going to fail, and it's going to fail this week. That's just what I'm thinking. Now, thinking and doing are two separate things. Now I have to look at the daily and say, well, how can you just say failing? Well, the stochastic has had a big move in the delta between the fast period moving average, the green line, and the red line, the slow moving average. And the on-balance volume is the blue W pattern right there. That blue line has rallied very well, but nothing great, but it is good. The MACD is at a very wide opening between that 9-period differential, the green line, that's what I call the faster moving average, and the red line, which is a slow one. The histogram is very strong, but the price has not, with all this activity, the price hasn't gone above where it was on the 22nd of April, where the MACD was much lower and the stochastic was much lower, and the price was much higher. So what I'm looking at is something where, on the rebound, it's usurped a lot more energy to the upside, and so far, all I can say is I need to see a decisive close above the 115.02 level, which is really not that far away, but we'll see. Why? Because, well, there are a couple of things that I'm also going to throw in here that you didn't ask about, but one is markets that go to all-time highs remain positive until you get a signal to say that they're going to reverse. Why?
Yes.
Because stocks that make, if you look at IBD or the New York Times or the Wall Street Journal, wherever it is, stocks that that make new highs continue to be the ones that make the new highs. Stocks that make new lows continue to be the ones that make new lows. That's why shorting weak stocks is the best thing to do, and buying the stronger stocks. But there's a difference. In my work, when I start to get to legs D, E, or F in a monthly chart, but especially in the weekly chart, that's where I have no choice but at least to endeavor to take some precautionary measures. So what's fascinating is you see the way the IWM has bounced back. Look at the way the QQQ series has not bounced back. It has literally taken that the last decline and turned it upside down and said that previous peak of 89.68 made on 89.68 twice, in fact, on the 2nd of April and 3rd of April. Look how weak the technicals were, and now look how strong the technicals are, and the price is very strong above it, except for one little thing. I'm in leg D. But when major indexes get with, like the 200 period exponential moving average, when they get really close to in this case a recovery high, it's almost like an all-time high for the Qs in the sense that it's 13 years or 14 years, no, what is it? 15, yeah, 2000. So it's 14 years since the previous all-time high. So this is really brand new territory. I want to give the Qs as much room to rally as possible, but I'm able to say, hey, very nice profit for subscribers. I can raise the stop. That's very different to your case where this is everything about it in the weekly, the monthly, and the daily says this so far looks more like a retracement failure mode than a brand new buy signal. That's at least for now. So the thing that I would do is I would rather than thinking of adding to this position, I'd rather manage the IWM position, and I would say some part of what I have right now has to have a stop. You can take it under today's low of 112.65. I would probably break that into two positions. One would say a break by the end of the day, halfway into the candle of today to somewhere around 113.20. I'd be thinking of taking a little bit off, just money management. But a break under today's low, either today or tomorrow, even though it would be maybe peak B and should go to a C and a D, that doesn't necessarily have to happen when you're in retracement mode. So I'm going to try to... Do you mind holding on?
Thanks, Basil.
Okay, so if you're going to hold on or if you're going to be listening in the den, that's fine. I just want to continue that because I want to show the 120-minute chart, which is a very important part of the puzzle right now in the IWM. I'll be back, folks. We're back with John. Dow's up 64, SP's up 9.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. So here we go. In the IWM, in the 120-minute chart, I did this, and when you do the notation enough times, there's a certain point when you look at it and you say, everything about this looks like it should be D. I'm missing something. So I went through it, and then I realized that little peak there at 11:30 in the morning on the 19th at 111.04 was surpassed by 1 penny at 13:30. That's 1:30 on the 22nd. By 1 penny, and that made your peak C, and now you've got a D. So what we're looking at here is that it's just the Dow with the New York Stock Exchange, the S&P, the SPY, the diamonds. The diamonds actually did it with the SPY last week. You're looking at key indexes that have made their requisite new highs in their weekly charts. It's just the Dow that's missed it by 50 points. Could happen today, could happen tomorrow. But I'm looking at the IWM. What I'm saying is, the 200-period moving average at 112.82 with the price at 130.35 says you're just above it. There is a left side, right side price time match which says 115.02 is a potential. But all I can say is that how 112.82 to 111.97 is held on any pullback will tell you whether it's going to happen right away. My suspicion is that there is a little bit more strength left in the IWM, and that seems to concur with what I'm looking at to say that we haven't quite made this week's top yet, that there's still, I need to get that Dow. I want to see the Dow and to tell you, so what I'm looking at, John, if you're still, John, you still there?
Yes, I am.
Okay. So, John, what I'm looking at is that the 120-minute chart has gone to a D. It hasn't made a peak D because we're going to wait for the entire bar to close before we know that it hasn't gone above 113.84. But it's holding well. Stochastics at 95%. All I'm saying is on a very short-term basis, I wouldn't want to see it take out the low of today, because that will start to say that the upside is really limited on the IWM. If, in fact, by the end of the day, there's another surge to the upside, the Dow is now within 15 points or 20 points of its all-time high. It could make that in the opening tomorrow. Then I suspect that we will get another little burst of strength in the IWM, and then it might fail before it gets to, before it gets to a leg C or D. But I would just be raising stops. That's the best way you can do it. I would not go short, not just yet.
Well, great. I do appreciate it. Just in parting, I had been looking at the NASDAQ composite, the NASDAQ 100 and the Qs, and I just can't help but think that action between April 24th and would have been May 21st, almost a month. Boy, that sure, in retrospect, looks like a big consolidation, kind of a basing pattern, and we've launched in the NASDAQ 100 and are on ways to stair-step higher into new highs over that 3740 sort of area in the NASDAQ 100.
Well, you can make it really, let me make it very easy. If 9136, the most recent recovery high, is pierced by going right into the 9250 area, in other words, it's not just a nominal 91.52 and then it pulls back, but you powerfully close above 9250, then this can extend a little longer, and we've had the consolidation, and stocks like an Amazon, which I identified, remember, just recently as having made a pretty decent retracement low. Those stocks should continue, but I'm still in the camp right now that even those stocks have made a retracement to the upside. We're going to watch them closely. Hey, thanks for calling, John. Always appreciate it. Folks, stay tuned. You've got North coming up. It's going to be North from Houston. It's going to be a great show on options, as always. Think of Swim platform users. And I will be back later today with Tom O'Brien for an interview. Dow's up 64, S&P's up 9. We're going to see how it closes. Fascinating period we're in right now. I'll be back. And don't forget my opening call. Check it out, front page of TFNN and the six-pack special. I'll be back tomorrow.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.